My name is Tatiana. I'm a director of FemTech Lab Accelerator, and I'll be moderating the panel today. And for those of you who are new to our community, maybe you haven't been to our previous webinars or some of our in-person events in London, we are a global platform for innovators and disruptors in women's health space. And our sole goal in this world is to help as many early startups as we can innovating within women's health, go to market, get ready to fundraise, find partnerships, and we run 2 cohorts a year, spring and autumn. We already accelerated over 60 startups. We have just graduated our 6th cohort in November, and they had on the 30th of November, they had the demo day, which was fully packed with investors, which is always a good sign. We have over a network of over 200 mentors, which are all leading industry experts. We have corporate partners who are fantastic go-to-market channels for some of our startups. Some of our startups are running pilots with corporate companies, and we have over 400 investors in our network, and they're all ready and primed for women's health. And with our investors, you won't hear what's FemTech and why it's a niche, nothing like that. So we have a fantastic, very friendly pool of supporters around us. Applications for the next cohort are now open. So if you are an early stage founder innovating within women's health, please go ahead and apply, or if you feel like it, you can go ahead and apply. We will start spring 2024 cohort in March, on the 1st of March, and we'll be reviewing applications in January. So coming back to the topic of the webinar, we have a brilliant panel today. Hi, Eva, Lily, Jack. They are, first of all, amazing experts in their own right, investors, founders, building brilliant products. But also, I'm extremely proud and humbled that both Eva and Jack are mentors on the program, and Lily is our alumni building Jack Fertility. So, without further ado, I will jump straight to you guys for a quick introduction, and Lily, I will pass on to you first.
Great, thanks so much. Hi, everyone. It's so surreal to actually be on the video screen because I've gone to so many of these webinars. And it's really bizarre that last year or this time I was just recovering from finishing FemTech Lab. So it's really incredible what a year can do, supported by amazing mentors like Eva and Jack and yourself, Tatiana. So thank you so much for the opportunity. I noticed in the chat that there are a number of folks who are building companies, potentially founders, as well as folks who are in the ecosystem, lots of familiar names. So great to see everyone virtually. And so what I'll do to introduce myself is I'm actually sitting in Jack HQ in Oxford, England right now. And I can tell a bit of the founding story as well as our experience with FemTech Lab and kind of where we're going from here. Is that all right? Great, thanks. Okay, so Jack was in fact born in Oxford. My co-founder and I met back in 2019 doing the Oxford MBA here at Said. So I'm clearly originally from the US and started out my career thinking I wanted to be a physician. So went to undergrad, thought this is my passion in life, and then sort of realized the US healthcare system was quite broken. And so I ended up deciding that my skills were actually better suited to helping people in another way. So ended up working first in big law and then in consumer banking, and came to the UK thinking I would go into fintech in London and that would be that. But the one thing I wanted to try during business school, and again, sort of to this drive of trying to help people and while also sort of furthering my personal goals and finding the right thing for me, was to just explore entrepreneurship. So I was lucky enough to be at Oxford the first year that we had the Creative Destruction Lab, which is a franchise of really incredible accelerators that are hosted at business schools around the world. And the theme was AI. And I ended up being assigned to this amazing AI drug discovery company that was trying to do better work with data through automation of the drug discovery process. And I thought, gosh, I have this undergrad in science that I never use, but I do actually know what all these crazy words mean. I can actually help on the commercial side. And luckily enough, we hit it off and they ended up hiring me. And I had actually met my co-founder, Nick Shipley, on the first day of the MBA, where he had sort of jokingly said, I'm having a baby in March 2020. And we said, oh, that's a bit odd that you're having a baby during an MBA. And little did we know that his little daughter would be born on the first day of lockdown. So he had to go into lockdown with an infant. And part of why they had their child during an MBA was because of some fertility issues. And then ultimately, as they were thinking about planning their family, they'd waited until their mid-30s to have children, and were trying to get tested to sort of make sure that their conception journey was as easy as possible. But during lockdown, there's nearly nothing available for men. And he sort of came to me as a friend and said, look, like, it's so strange that this is an awful experience. I really don't want to do it. And it's just wild that we're sending in postal samples, like PCR tests and COVID. And this is such a relatively basic test. And it would solve so many issues if we could just send it through the post. And I said, let's look into this scientifically. Like, there's a reason why. So we spent 6 months trying to talk ourselves out of the idea that ultimately became Jack, because we were like, surely someone's thought of this before. It's such a basic solution. Because as we started looking into it, he and his wife were trying, they were like, look, it's equally likely to be male or female factor. Why is the burden entirely on women to get tested first? And so as we looked into it more and more, we realized that it was just unfair for every party involved, as well as thinking about non-traditional family building. And we just became really convinced. And then we decided to ask every expert who was foolish enough to let us ask them about this. And we just never heard a good enough answer. So we decided to double down and commit to trying to build this, and then join FemTech Lab. So that's actually where our story kind of begins, is that we applied for a couple Innovate UK grants, got a little bit of initial funding through that, had the amazing mentorship last fall through all the incredible mentors in FemTech Lab. And then we're lucky enough to get a small grant through the accelerator. And then we were off to the races. So the story of 2023 is that we were really prepared to raise last spring. Ironically, first, Nick excitingly had paternity leave, so that was a thrill. And then as soon as he came back, Silicon Valley Bank happened. So we were just ready to sort of get that investment in the door. And unfortunately, the market was shocked and didn't quite recover, as we ended up finding out this year. So we went back out this summer after securing a lab, using that little bit of money to get this facility. So we're at the Wood Center for Innovation in Oxford, supported also by Barclays Ecolabs and the Oxford Trust. And actually started having a place that we could do product development. So through that, we ended up meeting through the incredible FemTech network, as well as through the Oxford network, met Founders Factory. And so we ended up joining their Reckitt Benckiser Accelerator, where we're really excited about learning about the category of men who care about their fertility, and similarly, the sort of consumer journey on that side. And then met some incredible other investors. So we were lucky enough to get...
May I stop you right there, because you're actually jumping into my next question to you.
Sure.
So we'll pause here for a second, and
okay.
then
Totally. Sorry, even Jack. I'm just ready on my roll. So I'll save that for later.
You have all the right points that I wanted to touch on. But let's hear from from Eva. Would you like to introduce yourself, Eva, please?
I got absolutely mesmerized by what Lily was actually saying. So I was like, just let her talk about it. It's all the right things. It's a fascinating story, so we can just be quiet anyway. I wish actually I had anything as fascinating to tell you about myself. So briefly about myself, I've spent the last 15 years actually working in family office space, first for a multi-family office, now for a single family office, where I spent the last 10 years essentially investing in 3 main verticals: biotech and life sciences, disruptive tech, as well as consumer products. A lot of them have been touching sort of in the femtech sector directly or indirectly. Things I invest in range from pre-seed up to about Series B, as well as some of the later stage stuff. And obviously, because I'm seeing a lot of really exciting early stage companies, I became an angel investor a few years ago. My thesis is around sort of below the waist, above the knee. So anything that touches this area, not necessarily femtech, I'm really not excluding men. So it's basically anything and everything I find interesting. So I'm super grateful to be here today, and I'm looking forward to having a really interesting discussion.
Thank you so much, Eva. I think it's fascinating how femtech is expanding. The term itself, like women's health, is expanded, or maybe it's shifting within our mindset. What does it include? And we don't exclude men either. That's why we're super happy to and super proud to have Jack Fertility, because fertility affects women as well. And if we can help innovate within this area, we're super excited about this. Jack, speaking of men, over to you.
Thanks, Tatiana. Well, thank you very much for the invite, and it's a pleasure to see you all again and see so many people on this call. By way of an intro, I suppose I've spent the last 18 years in the digital health space, and during that time built and sold a number of companies. They range from clinical trial data in the mid to late noughties through to global health marketing firms in early 2010s, through to medications management and then personalized health records. And then set up a family office in 2015 over in Singapore, primarily backing venture capital firms and private equity firms. And I'm based here in the UK, so the majority of my network sits in the UK, but also in Asia, within the family office venture capital world. And as a theme, as an investment theme, women's health, exactly to your point, it touches upon a number of different aspects of our lives. It doesn't matter whether you're female or whether you're male. It will inadvertently affect us. So we've all got someone we know of the other gender, and therefore actually it's in our interest that the right level of capital, the right level of innovation and support flows into all those different sectors. And so I'm very keen to hear what's going on out there, but also see how I might be able to help and offer some support and guidance along the way.
Thank you very much, Jack. I have to say, both Jack and Eva have been fantastic mentors, dedicating so much of your time to our founders. We are forever grateful for this. Right, so I can see from the chat there's a lot of early stage founders, so I do hope you find this webinar useful for yourself, but please start adding your questions. I'm sure you have plenty. Please add them into the Q&A so we can go ahead and start unpacking those. But let's jump straight into it. And before we kind of dive into 2024, your predictions and advice, can we look at 2023 and kind of, can you share your summary in terms of fundraising? What were the main trends in 2023, especially for healthcare or women's healthcare? And Eva, would you like to kick off?
Yeah, sure. So to be honest, my summary of the year is very simple. I'm glad I'm still alive in the end of this year. I sat in this position for the last 15 years, I've said before, and honestly, it was probably the most challenging year I have faced. The amount of companies going into liquidation, the amount of down round extensions that I've seen, and very disappointed shareholders. I think that's really the theme of the year. Last time when I was on this panel doing similar talk, I think in summer with you, we were actually celebrating one of my exits. So this time, unfortunately, we won't be celebrating one. This time we'll be celebrating a failures that I had just yesterday. And it's very disappointing because the company that went into liquidation, unfortunately, is in the sexual health, so for LGBTQ plus community. So that's why it's a bit sad, because it's kind of like very topic relevant, and it's a prime example of a business which unfortunately struggled to raise in current climate, where it had multiple offers from investors, and quite few of the VCs have pulled out the last minute, which was disappointing to say the least, not only in terms of like the actual investment, but also in terms of the impact that company could have made on the lives of the LGBTQ plus community. So overall, the market, I'd say, was pretty challenging. If we look at it in terms of both private public, the amount of IPOs this year hasn't been great either. If we look at some of the companies also which have been public going, bankrupt even on the public side, that's, the likes of Babylon. And I actually was just reminded by you guys about the SVB going into liquidation. That's another example how the industry is doing. So overall, I don't want to sound too grim, but the industry hasn't been doing well. Of course, we have some, outliers here and there, and some companies still doing great. But the general tendency has been that the IPOs are done. There is quite a lot of M&A activity on the private space, where the big pharma is actually snipping this early stage biotechs across the sector, not only in FemTech, but genuinely across sort of hardcore science. That's not doing badly, but as such, things, I think there is a lot of room for improvement for next year. So you mentioned, Tatiana, the trends that I've seen in sort of investment in this year. I think one of the biggest one for me was the sort of integrative medicine, as I would call it. So that's when conventional medicine is merging together with sort of becoming all-encompassing. So not only focusing on therapeutics or diagnostics, but really providing an all-inclusive solution. So I've seen quite a few companies in that space. Another very hot topic was all things, telehealth and at-home testing, ranging from sexual health down to mental health, literally any area you might think of. And another one, I think, which kind of has been really the topic of the year is the egg freezing and IVF. The amount of companies I've seen in that space, and that has been really the talk at any single investor party I went, people are only talking about IVFs and egg freezing. That's literally like the theme at the moment. And last but not least, another trend which I've seen quite a lot in 2023 is the sort of insurance coverage as well as provider adoption. So things like there are quite a few startups right now trying to do genitalia insurance solutions, as well as sort of all-encompassing things that we've seen in the employee benefit schemes across the spectrum, ranging from the women's health down to anything in mental health. So I think that's it really on my side.
That's fascinating. And I think you already answered Monica's question. There was a question about particular market gaps or opportunities in FemTech sector that you believe are worth exploring. So that kind of...
Yeah, I think that this kind of like all-encompassing solutions are out there. I think there are still opportunities. I'm a big believer in terms of opportunities for next year. It probably will be something along the menopause, because this year, again, seen a lot of companies are working in the space. But the problem that I found with that particular subsector is that solutions are all very similar. There is no clear differentiated USP for any of the companies. And the problem is like we're all trying to seem to manage rather than actually trying to come out with a new treatment or something, really revolutionary in the space. So I think no matter what you're going to be sort of jumping on and willing to be working on, the general idea is always aim to create sort of a category, creating a category defining company. That's really what I'm looking at. So no matter which category you go into, make sure that you've done your research and you really see, you're not just being blinded by your love or enumeration with some idea you might be having.
Fascinating. Thank you very much, Eva. Jack, are you there?
I'm here. I just switched my video off because I was having a few connectivity issues. So hopefully I'm back online and you can see me now.
We can hear you really well, but we can't see. Oh,
there you go. Sorry, I think it's sorry, I think it's dropping in and out. But I can hear you, so hopefully you can hear me. Yeah, so Tatiana, was it the same question you wanted me to address?
Yeah, I think in terms of your experience of 2023, and you've been working with our startups, with other startups, you're building a startup yourself. What's your feel for the 2023?
I think from an investment standpoint, or just generally, I think 2023 was a fairly uncertain year for everyone involved, whether that's on the investor side, family office side, or whether that's actually as a startup. Now, I think we've got through a lot of the frothiness. It kind of wiped out a lot of the frothiness that we'd seen in the past couple of years, where the general health tech ecosystem was very noisy. There was lots of buzz. It was very hard to cut through the noise and differentiate. And I think actually, I think Eva touched upon that within the menopausal sector, where actually there's a lot coming to market, but there's a very lack. There's not a great deal of clear differentiators as to those who are coming to the fore as to why they should win ultimately. Whether that's in terms of commercial strategy or whether that's in terms of their data utilization and personalization elements of it. I think in general, what did I see? I saw a lot of insurance-based solutions and innovation within the insurance space when it comes to health, life, fertility. Lots of at-home testing. I'm anticipating to see a lot more menopause-based businesses or perimenopausal-based businesses. But again, just to reflect on that point, is it an area that I think I'm going to be investing in or seeing investment go into? I honestly don't think there will be a great deal. I think it's going to be very, very tough. But where I do see an opportunity is around hyper-personalization. It's around how do you understand your customer incredibly well and deliver on that personal objective of the individual to actually capture them from the light and deliver lifetime value. Now, whether that's in firefighting phase of you trying to help them get better, or whether that's you're helping them try to achieve an objective like conceive, or whether that's actually looking at solutions such as prevention, because prevention is ultimately going to be where the health systems globally have to move more toward, because we just can't sustain going on the way that we are. I'd also kind of really hone down and delve deeper into that by saying I would anticipate nutrition as a medicine becoming key. So how do we use functional foods to improve our overall health and well-being? We're already seeing it trending in areas of obesity and type 2 diabetes. But I think there's an opportunity to further drive that down and personalize even further. But we may even see it come into the realms of thyroid. We may see it come down into, as our understanding of the microbiome in our gut and skin really start to unfold, and even the vaginal microbiome through one of your portfolio companies start to really unfold. I think we will start to see a lot more personalized solutions come through, and nutrition be a key determining factor in that, because I think that's one of the things where our understanding is really starting to grow. And actually, if we look at lots of the manufacturing capability that was once situated in China for nutraceuticals, whether that's vitamin supplements or others, I think a lot of that's starting to be nearshored and land in Europe and even the UK, and in a lot of cases the US. And so I think as that manufacturing capability really steps up a gear, and we look at units with small molecule formulation capabilities really start to gear up, then I think we'll start to see a lot more happen in the UK and Europe, whether that's through private label solutions or whether that's through unique formulations with patents attached to it around how nutrition and supplement can improve our overall health and well-being. So I see that being a key area to look at as a whole theme, not just nutrition as a medicine, but the whole infrastructure behind it. And I think, you know, my advice to anyone listening, looking at starting a business, would be to look at those areas, but really make sure you've nailed down on your commercials, not just selling a product, but how are you going to retain? What's that lifetime value of a customer? And how are you going to re-engage those who drop off at any point? Because they'll either drop off at the point of sign up because it's an arduous process, they'll drop off at the point where they've got your product in the basket, or they'll drop off once they've used the product, or a couple of months later. So how do you really add value across that entire life cycle of a customer? And if we can look at prevention, then I think it's a win, not just only for us as consumers, but it's a win for the health systems. And a lot of insurers and payers, the reimbursement sector now are looking at how do they create business models and how do they create solutions that actually incentivize healthier living. We're already seeing it with Vitality in the UK from a health insurance perspective, but I think our insurers are starting to work a lot closer with the employers, and that's a key driver. So I see that being a big area for us to really look toward in the future.
This is so insightful. Thank you so much. I would love to drill down to some of those points, especially around commercials and unit economics. But before we do that, Lily, so you've been fundraising in 2023, or you started. Can you tell us kind of what's your experience been as a, first of all, maybe tell us in very quickly what product stage you're at. Are you in the market already? Are you still building the product? And what's been your experience with fundraising in 2023?
Yeah, absolutely. Thanks so much. Yeah, I mean, it's sort of on the trying to build a product. I mean, that's all we're trying to do, and that's why we're raising. Building a medical device is not something you can easily bootstrap. And I think that's the thing, especially coming from corporate background and similarly from the MBA, is that I was very taken aback at the level of metrics that are necessary even to get some of the smallest level of funding. Because I think it's my experience is that, I mean, there's so many, particularly in the sort of gender specific healthcare realm, it's relatively nascent in a lot of ways. And I think people are trying to apply frequently frameworks that are frankly unknown to like in terms of how successful some of these products will be. So it's exciting in some ways, but what we found, so basically backing up, just to remind everyone if you've joined late, Jack Fertility is creating a postal sperm test. And so what we are doing is we have this sort of novel kit as well as an algorithm that allows us to give accurate results as if the individual had been to a fertility clinic. And within that, and I imagine based on what everyone's saying in the chat, a lot of people are trying to do things either that haven't been done before or doing something slightly different. And again, I think my experience throughout 2023 was initially sort of saying, okay, here, look, like we were passionate about the problem. We're showing all of the key traction metrics, but often when we got to sort of the final rounds of investment, it ends up being a bit of a risk analysis. And what we've learned through that process, through the market shocks and through, timing issues, and where we sort of really have united with our investors. So I mentioned we're in Founders Factory, as well as had some really incredible investors from the Oxford Seed Fund through the university here, as well as Moonstone Fund in Italy and Round X, is really aligning with the impact that the investors are looking for. So really understanding what their motivations are and what they want to see as the outcomes. But I will say it's just been incredibly frustrating. I mean, you get to some of these conversations and people are asking for what used to be, seed round, Series A type metrics for, we haven't raised a pre-seed round, transparent. And we're like, yeah, of course we would do that if we had money, right? Like that's, I mean, and so it's being really creative and thinking about, how to get around some of the no's. And I think that's one really valuable thing about going out to raise and speaking to amazing investors and having some of the incredible mentors that we have is understanding like how to change that no into a yes. Because some things you just can't do. Like for example, to your question, Tatiana, where we are in the product development pipeline is that. So literally we're testing in the lab right now, building out our kit and building out the algorithm. So we just finished that throughout Q4, and in Q1 of next year, we'll be doing a beta test, which is the full digital and physical experience. We cannot sell because we're a medical device and we need to go through that regulatory pathway, and we only have so much money. So we're counting every single pence, as we say. But what we have done is try to strategically use that money in ways that will protect what we've initially done. So we've just submitted a patent. We have a couple other sort of strategic IP assets that we're trying to build out so that we are able with the amazing investment that we have had, but at the level that we have, get ourselves to a point that it's really hard for an investor to say no. That said, again, putting my MBA hat on, right? Like I'm considering what I would want depending on the type of fund that I'm approaching. And I think there's almost as much as you're developing product market fit, like as a startup founder, what I've discovered is a lot of what I'm doing is assessing investors and seeing who's the right fit for us and the right type of risk profile and returns, timelines, all of those. And so I think a lot of people, I was really struck, and I even fell into the trap myself initially of just saying, okay, I'm just going to go down these traditional funding pathways. And then the complexity of the market this year has really drawn that into the light. And I think that, a lot of it relies on resilience and having to listen to all of the no's, and didn't really quite understand how painful that would be. But, I think another not super deep insight, but really having a great team and having a great support network is really important. And so that's sort of been my biggest lesson, is that thankfully in some ways, but also very painfully, we're all in it together. And I think part of it is just going through that evolution and supporting one another to the extent that we can. And we'll hopefully see the upside for that.
Thank you very much, Lily. It's I think it's such an insightful journey. I think getting no's sometimes can really help, and I feel that getting creative in 2024, either grants, collaborations, will be kind of the main trend. Eva, so you have shared with us the summer of 2023, which wasn't great, but you felt you showed a bit of hope for 2024, or am I mistaken? You have such an extensive experience as an investor in family office, as an angel investor. You see so many different pitches, so many different, probably hundreds of startup pitches per week, months.
Yeah,
So
there are lots of pitches out there, right? And to be honest, some of them I'm getting shocked with the terms being put forward for the investments. That's why I'm really hoping the year will be over. I was actually speaking to a company this morning where the founder was initially raising 2 million round and really struggled with that. But he actually had term sheets from VCs saying, you know, one was willing to lead, another one was willing to follow, and the whole 2 million was allocated. And then all of a sudden, like last week, they both pulled out, and now he's got an offer on the table, which is basically 150K instead of 2 million. And that would be the whole round. And this 150K is like for 50% of the equity. That's term sheet is done by another VC, and I'm like, are you gonna take it? And he's like, well, I mean, the thing is, like, I would love to take it, but I can't really take it because I actually need 300K to get me anywhere at all to the next milestone. So and this is just like a prime example of a story where I've been seeing so many of those founders this year getting disappointed and really not getting where they should be getting. And I think it's just because at the moment investors are very risk averse, and the general trend is that we're all kind of sitting there and waiting that better times will come, and I'm hoping that 2024 will be this better time.
I think, can I add on to that?
Please.
I think, you know, I would tend to echo what you're saying, Eva, and I think, you know, investors are now calling the shots. I think that's the long and short of it. For the last probably 3, 4, maybe 5 years, the startups really called the shots in terms of investment, and it was really incredibly frenetic. So investors would have to chase after the good deals, and agree to terms that they would never really agree to under normal circumstances. I think what's now happening is investors are trying to get their own back by pulling out last minute, because they're getting, you know, what you need to always remember, and I suppose this is a privileged position that we're both in on panel, is that venture capital firms are managing high net worth money. So if they don't generate a return, they're not going to be able to raise their next fund. So their career in venture capital is really going to hit a loggerhead pretty sharpish. So they've always got to be able to justify why they're making the investments. So I think, you know, long gone are those days where startups can start to ask for convertible notes in the, you know, as a term sheet. They'll say, oh yeah, we're raising on a SAFE or ASA. No, I'm sorry, I just don't think it's going to happen now, because actually what that meant a long time ago was that, or during the frothy times, was that the startups had control. They could move quickly, they could be dynamic, but the investors, they would be trusting them, and it would be incredibly risky. I think now, because investors are becoming more risk averse, they're now saying, okay, well, actually, no, we're going to do this on our terms. We're going to want liquidation preferences, meaning they get their money back first in an exit or liquidity event. And they want either seats on the board or they want equity, so they can actually call some shots. And I think that's starting to become more commonplace. It's a fairly European mentality. So I would also say shop around to anyone listening that's looking at raising money, but also go after family offices, corporates. I think, you know, Lily mentioned earlier that you're looking at grant funding and you're also looking at collaborations. I would say another way to de-risk, if you've got a device or you've got a product of some description that has a medical element to it, would be to conduct randomized control trials or conduct control groups where you've got evidence as to your product's efficacy, and do that in partnership with universities or academia, because they're always after collaboration from a PhD perspective or an R&D perspective, and they can really strengthen your grant applications as well. And more often than not, they'll have grant application teams, so you can actually piggyback off their grant application writing capabilities, where you're saying this is what we can do as a startup, and they'll write the bid for you, and then they'll do the evaluation, and you get the money, you get the exposure, you get a new partnership, and you get the evidence at the end of it. So I think, you know, I think that's a really interesting way to look at it. And I think partnerships, like you said, Lily, is a really good route to take. patents, and then partnerships would be everything. You know, even if that is, we've got a product now, this is what we're trying to do, and this is going to be ready in 6 months' time, but in 6 months' time, can I bank on you for doing a proof of concept, whether it's free or whether it's paid? If you can get that signed, so you have a letter of intent or an email stating their intent, that has value, because that shows that there's a market. And if you put, you know, if you flip it and you put in the hat on as an investor and you think, okay, well, why wouldn't I invest in this? And there's a bunch of potential reasons. But actually, if you think, how do you cross off as many of those as possible? Well, if you've got an evidence base through your randomized control trials or your collaboration with a university or a cohort of potential users, well, that's one big tick, because you know there's you know, clinical validity. There's some expertise there. Then if you go down the patent route, well, you know there's some intellectual property. If you then go down the partnership route and you've got signed letters of intent, well, then you know there's a market on the other end. So actually, if I'm thinking from a venture capital perspective or an angel investment point of view, then it's actually far, far easier for me to justify why I should take that risk. Now, again, if you're a UK business, really start to leverage SEIS and EIS, because the investor markets at an angel level, where you have your VC, your venture capital trust, your VCTs, but also your angel investors who invest alongside them, they've been hammered by the markets, so they don't have as much liquidity to deploy into investments at the moment. But if you can really start to move forward and you can start to say, okay, well, we've got all of these other things that I mentioned, you know, so the RCTs, the patents, partnerships, and you've got EIS or SEIS eligibility, then again, it's another big tick for them. So I think you'll increase your chances in that respect.
Thank you very much. Those are very kind of applicable tips that we, so it's all about kind of proving your traction, showing traction as much as you can in 2024.
But doing it in very measured and very considered ways. You know, I think it's one thing to say we've got this many users, but to be able to say we've gone through the process to prove that our product is working, to prove that it's doing something that we're claiming it's going to do, and ideally if it's the best, and then it's protected because there's IP that's patented, and then you move into the fact to say, and now we've got people on the other end who want to buy it or license it or work with us when it's live. That's why we need the money. Then you're more likely to get traction.
Thank you very much, Jack. I would love to also touch on the unit economic sides of it, but I see really interesting points from Brittany. Thank you so much for sharing, and interesting point that women's health is not really tailored to VC. Women's health is better for angels and family offices, and it is what we find as well, or grants. A lot of, I would say most of startups in our portfolio, some of them raise through VC, smaller rounds, earlier stage VCs, but majority would raise through angels, family offices, and Innovate UK grant is, for example, a really great one in the UK.
I'd like to just add, I mean, I would actually be inclined to broadly disagree. I think, you know,
go on. I think we're having a good discussion here.
Women's health. I think women's health, on its own, yes. I don't think that's an investment category or theme for venture capital. I just don't think it will deliver the perceived returns. However, it's about positioning, you know, and I think this is a really interesting one based on just general thoughts and opinions, but also based on who's on the panel. Because I would be inclined to say, well, actually, Jack Fertility isn't just a women's health company. Lily, feel free to jump in and shut me down if you think. But I would say that's perfectly targeted, because actually it's tackling men, it's tackling that issue of male fertility, but it's also for women because, you know, there's the desire to conceive. So I think this is really around how are you positioning things, you know, and I think if we're looking at things like, you know, some of the portfolio companies in the most recent cohort, Tatiana, I think, you know, whether it's a mindfulness application or whether it's actually period tracking. Period tracking is slightly different. That, yeah, absolutely is women's health. But if you can find how you can create links and partnerships and alliances where it branches away from just focusing purely on the woman into other areas where it does touch upon a man, or it touches upon a family unit, or employability and workforce well-being, then I think actually you start to build the business case. I think it's because there's a lack of understanding in venture capital, because they're so blinkered, and they really, because they see so many deals on a daily basis, they've got to quickly scan something. They look for keywords. It's no different to an AI bot trawling your CV or your resume to see whether you're suitable for a job opening. VCs do something very similar. They look for keywords, and if they don't see those keywords, or they see keywords that are big turnoffs, they'll discard it, regardless of whether there's applicability. And so I think it's around it's around a positioning piece. And I think the ones that I would anticipate winning are the ones who really understand how to position their businesses in a way that it isn't just blinkered and really isn't hyper focused on that.
Yeah, I'd just like to add a couple things, because I think, one, I think there is something, like, as you're talking about with women's health, like, it is such a complex field, and male fertility is quite nascent. And I think, Brittany, actually, you made a really good point in the chat just now about like the way the category is thought about. But I do think there are a lot of isms that come in when you're thinking about women's health. I mean, there's a massive willingness to pay. There's so much hunger, and there's just not the right, it's like, talk about product market fit. Like, it hasn't been happened, mostly because the funders often can't relate to the problem. And it's been interesting out in our funding journey. Again, I, as a female founder approaching people, I mean, I both experienced the sort of, well, why are you doing this? Like, why is a woman trying to innovate in male health? Which, isn't necessarily always asked when the gender roles are reversed. But also, I think precisely that, it's understanding how you can pitch to people so that they understand what it is. But I will say, in 2023, it's been extremely difficult to come up with saying, I'm doing hardware, I'm doing consumer health, especially given the trends that Eva so brilliantly talked about as well, that there have been a lot of scares recently in the market. And I think that one of the biggest challenges as a founder to come in and say a lot of this is that, and particularly in VCs, but a lot of people who are used to doing a little bit later stage investments, and in this risk averse mindset, you come in and you say, I'm doing something novel, I'm doing something risky with a massive like human element. Often people are like, well, I mean, first of all, it doesn't fit into a B2B SaaS like immediate financial model, but it also has just enough unknowns in a lot of cases that in this environment, people are just not willing to take that risk. So I do agree with Jack that I think that it's really important to find, again, your right investors. And actually, to Brittany's point as well, like thinking through whether like what's going to get your product in the right hands of the right investors. But I do think there is something too, like the difference between the investors and the founders that we hear, regardless of whether it's women's health or a lot of other areas, is that, especially as a founder, it's really difficult to have an investment conversation where you're like, look, I need the money to build this. And you think about sort of who gets to make some of these decisions and make the calls about the direction of the company. Because so much of this, particularly in women's health, is born out of the suffering of people who also see a market opportunity. And for me, like, I often feel quite conflicted about trying to make money off of what has been really difficult for people, but I also do see the opportunity to like build something much longer term. And it really, for the founders, they have to consider like what kind of investors are going to be on the journey with them and what kind of goals the actual company needs to be achieving. So whether it's what type of business you really want to build and whether it is a business is also something I would recommend to people as they consider their funding journey at an early stage.
You know what the great news are? There are enough investors out there for everybody. So we don't need to really argue about this, whether, VCs are right for you, angels are right for you, family offices, or whoever that might be. It's just whichever company we're building, I'm sure that there is the right source of funding for you.
I love that comment. I think we do have, I think in general, looking at the last 5 years of investment in women's health, it increased 300%, comparing to 15% in general in healthcare. despite the decrease and or investment freeze in last year. So we do have to stay positive. But I think more government support is definitely required. So Lily, kind of continuing maybe with you, or shall we jump? Let me just have a quick look because I think we've got some questions. So there is a question on crowdfunding. Sorry, is it a viable option for 2024, especially as we're thinking of different creative ways to fundraise?
I can just quickly jump in and say from our experience, we are considering doing that. I think the challenge often is that you really need to sort of think about who your co-investors are and whether you're going to take some institutional funding along with that and have the right partners in place. But I have seen among peer companies, particularly, I mean, even within the FemTech Lab portfolio, but a lot of peer companies at early stages are considering doing this. But again, I think it is really considering why you're using crowdfunding. And for us, we're still in that journey and in conversations within our network and within our existing investors to understand whether that's right for us. We likely will do some component of that in the future because it's a great way for people to find out about your product. And particularly in consumer health, we're really keen on people hearing about Jack and being prepared to get involved. And we love, because it's such a shared and personal and profound taboo issue, like we think it would be really great for our strategy, but it's really deciding when that's right for the company for us.
Thank you very much, Lily. Maybe one final question before we jump into Q&A. Eva, Jack, what's your kind of advice for the founders in terms of the economics of fundraising? Would you advise to go for bigger rounds, smaller valuations, hold off if you can? And again, especially touching on unit economics, and I know, Jack, you've touched upon it. How relevant is it for earlier stage startups, and how do you answer the question that you are too early stage? But let's start with kind of just like your advice on the on fundraising in general.
Well, I think first of all, before you come out to fundraise in 2024, one of the key kind of advice I have is streamline for efficiency. So really cut out all the champagne expenses, because the amount of businesses I'm seeing which are still trying to fundraise kind of with this old mentality where they're having this fat in their fundraise, which is really not available right now. And also for the sort of fundraisers to come, really identify what is your true differentiation, because it used to be, people used to say, like, I have this, big idea, it's $1 billion market, or I'm going, influence so many people and change the world. I don't think that really cuts it at the moment. It's really thinking really hard about what is the true differentiator that you've got. And another thing that I've seen like a lot in 2023 was like community-based businesses. And it's all, I mean, nicely said that you have a community, but to be honest, I haven't seen a community big enough to actually make a viable business out of it. And another problem I've been genuinely noticing is that it's really hard to monetize in those communities. So I think when you come out to raise money, really think about what is your target audience who actually can afford to pay and is willing to pay. Because again, with the whole cost of living crisis stuff, people are cutting down on their expenses. And kind of like when we talk about the crowdfunding aspect, so just to tie it back with the previous question, is that I think it's a great opportunity still to do crowdfunding, especially for consumer businesses, because your consumers are your biggest champions. If they love the product, they would be willing to invest in it. The only problem I'm seeing currently, and I'm seeing this more and more, especially in the angel investor circles, people are kind of really holding the money because A, they're not getting as much anymore. B, it's very unstable, like what is actually future holds in the next 24 months. So this is the reason why I still like all of this is still viable options, and there will be businesses raising, but I think it's really coming out with true differentiators, as well as really making sure that your plans are as lean as possible.
I love that. Thank you. Sorry, go on, Jack.
No, sorry. I was just going to echo that, and I really think this is a question. 2024 is going to be a question of streamline your business, really cut the cost down to what you need, and really demonstrate that there's a market. So demonstrate there's a market, demonstrate your key differentiators, how and why you're going to win. And I think if we take that back to a few of those examples earlier in the webinar, I think they will help you succeed. And I think if we then start looking at, you know, how you can maximize those chances, or why, or rather, where is that funding going to come from? Just to recap, I think, you know, yes, VCs are still investing, but they are very risk averse now. And if you have nailed your differentiators, you have really run your business lean, and you can show what you need your money for, then I think they will certainly be interested. I think you're too early is kind of rejection is a fob off, and actually you need to get to the bottom as to why, and get them to say what do you feel, what sort of metrics do I need to be hitting for it to be worth yours and my time, you know, ultimately. So put it on them, and really understand, see if you can get their support and mentorship moving forward. I would always say, don't underestimate the power of keeping a list of investors that you've reached out to and keeping them updated every 6 to 8 weeks. You know, give them send a mail shot and say, hey, you know, just checking in. This is what we've been up to. This is the progress we've made. Because there's nothing worse than trying to raise money and then 6 months down the line you've still not closed a round, but you're reaching out to the same investors. You know, the same applies if you're a startup, or if you're a venture capital firm and you're trying to do that, reaching out to limited partners. The same applies. You know, you think, okay, well, why haven't you managed to raise? So it doesn't do you any favors, but also don't necessarily just raise when you need it. Raise 6 months before you need it, and start having coffees with investors to say, look, I don't need to raise right now. I'm not pitching to you to raise money from you. I just want to get to know you, so when I am raising, it's relevant. And then you've got a warm intro, because this is the big thing, is we all buy from people we know or like, right? And we've had a warm intro to. So I think there are all of those sorts of things. When it comes down to, you know, do you raise more than you need? Do you raise what you need, or do you really run it lean? I would say my advice would be, you need to raise what you can justify. It's not just pluck a number out of thin air and say, yeah, I need 500 grand. Well, what are you going to use it for? Oh, well, I'm going to put 40%, 50% to marketing, and your pre-product. It doesn't work like that. You've got to be able to have the numbers stack up every single time, and be realistic around what you're paying yourself as a founder. Don't put yourself on peanuts where you can't afford to live, and you're having to live off, you know, loans and credit cards and so forth. For VCs, this is a flash in the pan for them. You know, their bills are paid because they charge management fees. For you, this is your business, this is your livelihood. So don't waste time with VCs that you don't think are applicable, but also make sure once you have raised, you're paying yourself something that you can live on. I'm not saying 6 figures and you've only raised, you know, 250,000, but pay yourself a salary that you can actually live on. I think that's important, especially in that, you know, today's age. And I think that's often underestimated. I think there is this perception that if you're a founder, you've got to be living on the breadline, and investors expect to see that. I mean, I can't speak for all of them, but the ones that I engage with and work with certainly don't. But they also don't expect you to pay over the odds, and, as Eva said, have that champagne lifestyle. So yeah, that would be my kind of thoughts.
Thank you very much, Jack. We have 4 minutes left before unfortunately 3 minutes before we have to close, but maybe like we have questions. We need to continue. We need to continue this this webinar, and I feel we need to bring Brittany onto the panel as well. Any final word of advice for startups raising in 2024? If there was one thing you would share with them, what would it be?
I think 2023 made us finally realize that this is not really an environment where it's all about fundraising. It's actually about building a business. So I really wish that startups in 2024 focus more on building the actual business rather than like fundraising, because I think that there is okay, it's maybe a little bit different when you talk about medical devices or hardcore biotech, where, you know, there are clinical trials and everything else required, which still can be funded by, you know, grants, collaborations, etc., etc. So it's not always relying on investors' equity. However, I think for a lot of companies which operate in the digital house or in the consumer product space, honestly, it's not about raising money. It's about building a business. So that's what you should be really focusing on in the year to come.
100%. Build your revenue book. You know, get your revenue going, demonstrate as a market, and then raise when you don't need the money. Well, when you need the money for a growth and expansion, because I think we touched upon it earlier, and I think Lily, you mentioned it, that investors now for seed rounds are looking for Series A metrics. So if you've got revenue, you've got customers, you've got a business, and if you can show that growth, and then model that out to say, okay, well, this is the growth that we've managed to maintain or sustain with this much capital through, you know, organic growth. And then if we get this cash injection, which we're fundraising for, then this is what's going to see that J curve, that hockey stick growth. I think that's actually what will really capture it. And so that would be my, you know, really building on what Eva said, that would be my advice to any startup within 2024.
Amazing. Lily.
Yeah, I think just what I'm yelling at my future self, hopefully after I'm taking an actual week off for Christmas, which I don't think I've done since we started this. We'll see, touch wood. I think for everyone who's on this call, I'm really impressed by everyone who's sharing in the chat. And I think one is just like double down on your support system, because I think that's also where I've even found some investors, frankly, is through people who are similarly motivated. And just really make sure that the support is there, because as much as it's hard when you're building something that you're pouring, again, your time, your money, your sanity into, it feels like it's really, really like all or nothing. But the thing is that the businesses come and go and the problems will still be there. And I think focusing on community and focusing on really like building that momentum around solving these massive, massive problems, that's often where you get the best collaborations, the best investors. So reaching out, asking for help, and just trying it out, precisely as Jack and Eva said. That's what we're hoping to do in 2024, and we'd love for everyone to join us in that, and in FemTech Lab.
Wonderful. Lily, thank you so much. And thank you everybody for joining us. We are closing today's webinar, but if you want to find out more about possibly FemTech Lab Accelerator, or if you have any further questions, we are holding a Ask Us Anything webinar on 11th of January. Kate just shared the link. So go ahead and sign up if you want to see us again. And yeah, oh, by the way, I'm really sorry we didn't have enough time to answer all of the questions. So we'll be copying all the questions and posting the answers in the follow-up LinkedIn post. So follow us on FemTech Lab on LinkedIn, and hopefully we'll continue this conversation over there. Eva, Jack, Lily, thank you so much. It's been really, really inspiring, very insightful conversation. And Lily, best of luck for your fundraising in 2024.
Thank you so much.
Thank you. So appreciate it. Take care, all.
Thank you.